Hi and welcome to the channel. Today we are going to analyze Verizon. First we'll find out the dividend score, and after that we'll check the valuation with the help of fast graphs. A market cap of $148 billion, the current stock price is 35.40 and they operate in the telecommunication services industry. Let's take a look how they performed the last 10 years compared to the S&P 500. Verizon is the black line, and here we can see that if you invested $10,000 10 years ago, you would have now $12,456. So they have underperformed the S&P 500 by quite a lot. And this is with dividends reinvested for both the SPY and Verizon. Now some financial data. The annual sales growth the last 5 years on average has been 1.2%. Not good enough, that's an X. The earnings per share growth though is at 10.6%, so that's a check mark. The analyst expects future earnings to be a bit weaker though, 3.35%, that's an X. The return on capital is quite strong, 13.4%. But Verizon has an enormous debt of about $170 billion, and that compared to the free cash flow they are generating, it would take them about 12 years to pay off their debt. Now some yield data. The dividend yield is really strong at 7.4%. They are not buying back any shares. Actually, last year they issued 1.4%. The payout ratio is about 50%. The dividend growth isn't that strong, only 2%. And they have been growing this dividend for 17 years. That makes up for a dividend score at 5 out of 10. Let's check the valuation. Here in fast graphs we can see the orange line, which is the earnings, are not fluctuating that much. It's steadily going upwards, but not at a very rapid pace, only about 5.85%, so it's not beating the index compared to the S&P, which has about 7% during this period. They are raising their dividend frequently though, which is the white line. And if we compare Verizon to its normal PE, which is about 15, actually 14.71, and the current stock price, we can see that it's actually disconnected and trading at the PE at only 6.76. So if you like Verizon, now might actually be a good time to pick up some. If we plot out to late 2024 and analysts' expectations, we can actually see an annual rate of return of over 48%. Please hit the like button and also watch one of my latest videos where I reviewed a subscriber portfolio. See you soon!